The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Well, good afternoon to you. This is the COB. I'm Nadine Blaney. Very pleased to be here with you, Juliet Sally.
Yes, I just saw myself on the promo. That was a bit exciting.
It's the end of the day, so you know the drill. Podcast form or watching us live. We take you through the day that was, key themes of the day, and of course get you across the market close. And it's been not a good session at all.
No, absolutely. So we had those headwinds, I guess, from the US session as well with that sticky inflation print. Does that mean the Fed's going to stay higher for longer? And then you've got the likes of BHP going ex-div, so huge weighing on the materials space and a very down day today.
Yeah, we've got, iron ore retreating because we had that China trade data that came in weaker than expected. In fact, that's one of the key themes of this session. Part of the market malaise, we really did watch this local market tank. The last of the day's trades are going through the ASX still, but it looks like we're going to end down more than 1%. Again, on the back of some concerns, not just about growth in China, but global growth really as well.
Yeah, absolutely. And in terms of what we've been seeing in our economy, and it was really interesting in the last hour, I had Clifford, who's very negative on the economy, versus Mark Bailey, who was a little bit more upbeat. So I actually would think it would have been really interesting to have a double header with those. But we had Philip Lowe speaking as well, and that was his outgoing speech. Mark gave him a 7 out of 10 for his tenure. Clifford gave him a 2. Ooh. So it's really interesting to see the overall mood on RBA governor, who's dealt with some really unprecedented times in his tenure, including, of course, the pandemic.
Yeah, of course, he said hindsight is 2020. There had been mistakes made. But again, throwing the kitchen sink was an unprecedented situation. And I thought it was interesting that he said if you average out inflation over his tenure, it actually was sort of within the target band. And I also liked what he had to say about when inflation was low, people were calling on him to lower the inflation target. When inflation's high, people calling on the RBA to lift the inflation target, and he's saying that's not how you do it. Yeah, it's true. You don't put a target and then just
we're all,
change
as Andrew, I think Andrew's written that in his piece today, we're all central bank governors from an armchair, aren't we?
This is true. And that's Andrew Gagan's piece in our newsletter, I'd say the sister newsletter to this this piece here, and that's called the COB as well. If you just like to give things a bit of a read, find some key interviews from the day, you can just sign up for that, and you can do that via the website as well. But yeah, Juliet, interesting to note, Clifford, Mark, the divergence between those opinions. I mean, those interviews will be up online shortly as well. Let's take a look at some of the sectors, though, because I think that when you look at this page, the materials page, that will really tell a story, and it tells the story of companies trading ex-dividend, which has been a real theme, throughout this week.
I mean, you take BHP paying its lofty or hefty, as you might say, dividend out of the market. That is going to be quite a hit, isn't it? 5.1% of one of the biggest stocks on the index. I mean, we're also looking in this material space about what the China trade data meant as well, with another monthly decline in imports and exports, although it was a little less steep than expected. Fortescue Metals there closing the day down below $20 a share.
Yeah, and I mean, it's interesting because iron ore has been performing quite well, but today was sort of the straw that broke the camel back. Also, oil price coming under pressure as well. Let's quickly check in on the lithium names. Let's move on. There we go. Liontown, Albemarle, you know the story there. But yeah, on the energy point, so we did see oil prices easing today, again, on the demand side of the equation. And also in terms of supply, I mean, Saudi and Russia really looking to control the price. And so, with the extended production cuts coming through there, that has been very, it's been very supportive of the oil price in general for a couple of weeks now.
I thought it was interesting, the Santos story, because you did have Moody's kind of reaffirming its rating on Santos, but it fell in line with, I guess, that little bit of weakness that you saw coming through from oil, which I think is still worth noting is holding near those 9-month highs. Let's have a look at the healthcare space as well. Some really interesting calls that we had on the trade on the healthcare space today, but CSL was a laggard, off by 1.2%, and then ResMed coming back a little bit. Of course,
Yeah.
that stock's been trading under significant pressure.
Totally. And Rudy Philippek van Dijk from FN Arena joined us earlier on today. He detailed 3 broker downgrades. That's up online if you'd like to get a view on what the brokers are saying. But he said, finally, it looks like there's some bargain hunters moving into ResMed, finding value in what he reckons is one of the highest quality stocks on the ASX. So yeah, Telix Pharmaceuticals has been one of the best performers all this week. I haven't seen any really meaty news, but it
Grady
does...
had it as a buy, I think.
A specky buy,
yeah,
Bell
yeah,
Potter?
yeah.
Or probably not a specky buy. It's
they-
one of those few biotechs that are really commercial,
Yeah.
really bringing revenue in through the door. Look, we are continuing to watch that strike action and how that's playing out for some of these companies. Coles.
Well, that was an interesting story because of this TikTok video. I mean, not too much movement in terms of its share price, but a TikTok, I guess, what do you call those? I'm not on TikTok. But
Me neither.
Somebody who uses TikTok. What if the you?
TikTokers or something.
A
I don't know.
TikToker, yeah, she videoed, it was quite interesting, this, I think it was a jar of Vegemite that was supposedly on special, but it was actually 30 cents more than if you lifted that special sticker off, what the general price was. But we know as well, Coles has been saying, look, it's been the subject to some theft, so it's going to really try and boost its security there as well. And NAB, that was an interesting story because the AFR reporting there could be some more job cuts there too.
Oh, listen, those are the times that we're living in, to be honest. I had a good chat on the call today with my guests, Michael Gable and Adam Dawes. If you haven't caught that episode, you should do so. It was a good one. But we were talking about the office market and just what will bring people back to the office. I'm sort of going on a bit of a tangent here, but job losses are going to start bringing people back to the office.
I heard you say as well that if people start to earn less, because that's happening in the US, right? Like if you're getting a New York salary, but you decide that you want to live out in Connecticut, they might dock your salary. Is that going to drive people, pardon the pun, back to the office?
Yeah, well, I would imagine that for some it would. I mean, I understand that commuting for hours, I mean, I don't like doing it either, but I understand the logic of people wanting to work at home for some of the time, but yeah, there's so much at
if
play.
you're paying for city rents, then you want people in the office.
Yeah, totally. Okay. Also on the call today, we had a stock of the day, which was Bubs. It's one of the laggards from reporting season. Revenue is not going well. They're putting a lot of stock on this North American infant formula licensing. So they're doing a study there to make sure that they can get that permanent permitting, and I'm just breaking it down very simply. But don't think that sold my guests today. Let's take a listen.
So I think the market was certainly looking for that China story to really push forward, but they've said that there's lots of excess stock and a lot of inventory that they can't get rid of in China, so hence why that's coming off, all that revenue, that outward costs are going to be higher. So yeah, I think overall for me, this is somewhere where you do not need to be unless you can start to see some costs are being lowered and revenue starting to move higher. I would say get out, and it's a sell.
Is how do they call it, a reset? So when a company's undergoing a reset, I think it's early days. It may work out, but at this point in time, I think it's just way too cloudy to take a punt. Even at 17 cents, it could be quite a bit lower than that.
So, not sold on Bubs. Too much execution risks, too much riding on that North American expansion. So you can check out that in its entirety up online or in podcast form.
Yeah.
Why don't we go to Adelaide now? Fraser McLeod is joining us from Shaw and Partners. Fraser, welcome to the program. Can you just give us your thoughts on the market? I mean, we just keep rejecting that 7,300 level, big, sell-off in some of those miners today. What are you feeling?
Yeah, I mean, you're right. A few things have turned ex-dividend, so you can forgive them on that. Thanks for having me on. It's a market that's obviously driven by overseas in terms of sentiment, and it's the old story of good news being bad news. So, the stocks have fallen on the US service sector, coming out with some fairly upbeat or maybe slightly more positive than some would have feared expectations of a soft landing. That then instantly places the market into the view that that we won't see relief on rates soon, so stocks go down. I mean, it's counter to perhaps how some of us would have been originally taught, 20 years ago. But we are still in a market that looks towards stimulus as being a key positive that must push share prices higher, and that's probably what we've seen over the past couple of days. So market a bit soft because of that. We're still probably trading on a market that's around about, I'd say, a 12% total shareholder return on our scan, maybe 4% yield, 8% capital gain. That's in okay territory. It's not really the type of market to be pushing hard on because it's great value. But we've bumbled on through, and it's also not a market to be selling either. There's a few stocks that are tempting enough.
Fraser, I want some good news because I've been a little bit depressed by all the recessionary talk, especially in the last hour. But you're talking about some of the Aussie businesses leading on a global stage. What are you looking at in particular?
Look, I think it'd be worthwhile just to look at maybe three different stocks. Is what I suggest really for today. That of just great Australian businesses that are punching maybe above their weight even on the world stage, and really great growing companies that are probably quite cheap as well. So let's try and put a bit of a positive sentiment towards the end of today. So a few companies to look at. First of all was Redox, which was the biggest IPO. Not a lot of IPOs in our market this year, but Redox just came out with their first listed results and beat prospectus expectations. So good on them. This is a long run family managed business and that has listed on the market. Their earnings were well ahead of prospectus. The margins are still very strong at above 20%, and it's cheap. It's cheap growth into the future for their compounding revenue into the future is looking pretty solid, and they've made an excellent job of controlling costs. So this is a chemicals business that is growing internationally. They're a distribution business. It's quite a defensive business, so it's really defensive growth. Steered from Australia, and yeah, a lot of reasons to like that one. So in a difficult market for IPOs this year, nice to see that one trading above its IPO price.
Fraser, there is a company. Okay, bear with me because I know one of the companies on your list is Crisis.
Oh yes.
Yeah. And I was sitting last night at the Startup Daily Awards, Startup Daily, one of our sister publications here at Ausbiz, and I was sitting on the table with a gentleman who founded Crisis from the CSIRO. He is currently working on a startup that detects landmines underground using technology that can actually, instead of just detecting metal, it detects the actual chemical
material.
Yeah. So anyways, but I was saying, he said I've actually spun out a few companies from CSIRO, one of which was Crisis Corporation. Don't know if you've heard of it. And I said I have, because it was one of the companies that were put to the investment committee just the other day. So tell us your assessment of this company. Is it an Aussie battler that's going to win?
Yeah, an Adelaide-based company. I'll let you know as well. So they do photon assay, which is about as scientific as I get. But basically, if you're looking for gold or silver or copper, then this is now the leading gold standard. So it's faster, it's safer, it's more accurate in terms of gold analysis than for mining companies than the current technology. And it's obviously the case that the management are willing to pay up for that style of product as well. So they're pretty cheap. They're trading on for the growth. So already the stock price has doubled over the course of the last year. We value them at $6.90 now. It's probably quite cheap because it's only trading on 11 times forward earnings. And so yeah, it's as a more, I would classify it as more of a technology business than anything else. But nice to see an Australian product really just dominating, and for the feedback that we're getting from management is very positive in terms of the talks that they're in for further uptake. So yeah, I like that one a lot.
Nick Cutmore is the gentleman's name, just as an FYI, and the company, the startup that he's working on right now is called MREID, if anybody wants to take a look.
Oh, Nadine, moving with the movers and shakers. All right, let's go to Paladin as well, because that's a stock that a lot of people that come on our show like to talk about, and this is really just on that uranium piece, ripping higher as well. Yes. What do you like, Fraser?
Look, I mean, I've talked about Paladin for the past couple of years, really, and, a bit of a bore with it, but it is the sector standout. The reason it's the sector standout is because if you believe that the uranium price is going up, which it certainly is, then this is quite a low-risk path to production. So they've got the Langer Heinrich mine, they own 75% of it. The Chinese, through CNNC, really government-owned entity, they own the other 25%. And there's a few factors which are coming together at the moment. So we know that utilities need to buy. We know that the volumes of contracted market into the uranium market has been relatively low, considering where they should be by this point in the year. So probably over the course of the next few months, towards Christmas, we're going to see even more pressured contracting at a time that the uranium spot price has ticked over a 16-month high. So it's now trading at $62 a pound, could go a lot higher. So it's those with the ability to be able to supply into market in the near term that are really going to see the benefit. And there's a handful of companies around the world that can do that, because this is a sector that has been desperately underinvested post-Fukushima over the past 10 years. Paladin is probably there's a few others, but Paladin is probably our key pick to be able to deliver and supply. And also we saw this year, or this month rather, over the course of the last few weeks, we saw further really geopolitical problems in Nigeria, and that's a big producing country as well of uranium. We saw Cameco, who are the biggest listed entity as a producer in the world, and they've come out and said, look, we've got some challenges in terms of volumes that we're going to be able to bring to market. We are contracted, we need to be able to supply this, and we're going to have to even go into the market itself and buy some volume, rather than, because what we thought we were going to bring out of our mines, we're probably going to be a bit short on. So all of this is coming together. The weather is looking pretty sunny for the uranium market if you're on the supply side. If you're on the buy side, it's looking a bit hairy. So if you are a utility and you're running a nuclear power station, one thing's for sure, you don't care what price you pay. What you need is security of supply, and that's what we saw last time around when there was a raging bull market in uranium. And so things are warming up, certainly amongst the listed uranium space, and Paladin are our key pick. We get a $1.15 price target on it, but what does tend to happen on these things is that they overcook on the upside as well.
All right, Fraser, nice to have a ray of sunshine with 3 Aussie companies that are looking good. Nice one. We'll speak soon.
Thanks again. Cheers.
Fraser McLeod. We'll put that up online, of course. I suppose we're going to be scraping the bottom of the barrel for some of these leaders of the market. Not so. We've got Chalice Mining up by about 9%. So Chalice has been hit really hard. It had its price target cut 50% by UBS just the other day. It really has taken it on the chin. So I guess this is a bit of buying coming in, a bit of bargain hunting happening here to send it to the top of the pops today, up by about 9%.
And Telix Pharmaceuticals, I mean, that rose something like 12% after its results. And we were talking earlier about how Grady from Bell Potter had told me yesterday they think they'd moved that from an actual buy from a speculative buy. So certainly one that's on a few people's radar. It is up 3.5%. Bendigo and Adelaide Bank, not bad when you're seeing the banks as a whole lower today.
I mean, it did trade ex-dividend earlier in the week. Boy, the days are running into one another. And I'm just going to, name drop the AFR because their Street Talk columnist has spotted unusual trading activity in takeover target Liontown this morning. Of course, Albemarle is taking it over. They're saying that WA stockbroker US Hartley's traded close, 1.7% of the company across 5 large blocks at $3 per share, so piquing the market's interest given the shares were trading at $2.90 a piece. So the AFR is saying eyes on Gina Reinhardt. The plot thickens. Okay, laggards today. I would imagine we've got quite a few to hang our hats on here. The worst though, Super Retail Group down by 7%. I did see this morning, looking for why the share price was under pressure. There has been a change in directors' interest, so whether or not that's selling, I didn't have a chance to go and read it in detail, but that would be my assumption. Other than that, we did see a better day for coal stocks yesterday because the royalties being put in place by New South Wales, I suppose, were lower than some had anticipated. So maybe a bit of give back there, but also, when we've got this negative story coming out of China, it's just been a really dismal day for a lot of those mining companies.
I mean, that's never going to be great when you're seeing the export picture under a little bit of pressure. And I think as well, what Clifford was saying too, with our Aussie dollar weaker, we're kind of not even getting the positivity that you might get from lower exports with a higher dollar. BHP, we've been mentioning that ex-div play, so down by 5%, and Sierra Resources also under pressure today on a stock that is only trading at 57 cents though, but a 5% lag out there.
Yeah, and Star Entertainment, I mean, we know that I guess the New South Wales government has thrown in a bit of a lifeline. There's no news that I can see associated with that move today, but regulatory risks, there's a lot of headwinds for Star Entertainment right now. Quickly, in the small to mid-cap space, IperionX. I do know that has done a deal in the United States. They're looking to, it's titanium, I think, but really looking to tap into that need in the US for some of those critical minerals to come from, local sources. Other than that, not sure what's going on with the rest of those. The laggards, though, Juliet, let's see if there's any sort of
Wildcat Resources, a bit of a wildcat, down by 11.25%, and Tier 2 Minerals, they're off by about 8%.
Okay, so that brings us to what's going to be happening through the overnight period. And one of the big ones that we're keeping our eye on, we have all throughout the pandemic, is this US jobless claims.
So that the unemployment data, initial jobless claims released, as well as that non-farm productivity and unit labour costs. So that's always a big one before you get the key job numbers in the United States and an indication as to how the economy is faring. We talked about as well whether or not you'd start to see companies pausing on hiring or even pausing on in terms of what they could be paying in bonuses and the like. And then the Eurozone is the big piece too there, that final estimate to its second quarter GDP.
Yeah.
And the laggard of Germany being the weak link there.
We also, tomorrow morning, Juliet, I know you can't wait, we'll be able to mull over what the Fed's Harker, Goolsby, Williams, Bostic, and Bowman are going to be saying. So warming up the market for whatever will come from the Fed next. Speaking of next, tomorrow's a Friday.
It is.
Hey, I like Fridays.
But I mean, not much happening when we're digging for ex-dividend stocks being the leaders, and some of those are small caps as well. But WiseTech are paying out a dividend of 8.4%.
Look, there might not be any big, blockbuster data on the horizon here locally, but we will have you well covered, as per usual. An awesome lineup of guests that are coming on with us. We'll be taking you through small caps, we'll be taking you through the big picture, the call, and I was talking about startups a little earlier on, so I'll give a little bit of a plug to Startup Daily, which is at 1:30 p.m. Sydney time tomorrow, and I'm sure they'll be talking about some of the winners from the Startup Daily Awards.
Did you have a good night?
It was a really good night, and it's just always so inspiring to be in a room full of people doing just cool things and looking to, really transform the Aussie economy as well. Just talking about how the tech, the innovation, I mean, that is, if we want to be a future-focused country, I mean, we've got to support all of these innovative ideas that are coming out, and the technical prowess of these people is just really, really impressive. That's my parting thought, I suppose.
Well, my parting thought is, as you mentioned, it is Friday tomorrow, but we are going to say goodbye for now, and we'll see you with all the latest tomorrow.
Bright and early. See you then.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.